Hello and good morning, listeners. Welcome back to Almus Market Mornings, your daily dose of global financial updates. I'm your host, Swaraj Rajagopal, and we have got you covered on everything from currency shifts to pivotal central bank decisions and important speeches. Plus, you'll gain expert analysis on macroeconomic data that's shaping the market narrative right now. Join us for this episode and navigate the markets with confidence.
Many economists and government officials have been vocal about the need for a rate cut in India. The rupee has taken a hit as people place themselves for a rate cut, so all eyes will be on today's MPC outcome. Even more so since it's the first rate decision by India's new central bank chief. Later, we have the crucial non farm payroll from the US, which will give further insights into the prevailing labor market conditions. Good morning, JK. Your thoughts on the MPC today? What can we expect from the RBI?
Good morning, Swaraj. Yes, this is the first debut meeting that Mr. Malhotra will be chairing, and very interested to hear him out. Apart from the policy decisions, also his outlooks and how he approaches the overall policy, and that is my definitely interest. And yes, the crucial thing that everybody is looking for is whether there will be a rate cut. As of now, majority do expect a cut of 0.25% in policy rate from 6.5%. It has stayed at 6.5% for exactly 2 years. It was raised to 6.5 years on February 8, 2023. And also, if the cut rate, it will be the first cut in last 5 years. So it's a very significant move. It happens. But what can actually support the rate cut? See, the domestic inflation seems to be easing. Looking at the rabi crops production and the recent fall in vegetable prices, etc., and festival season all being over, I think inflation is going to ease further and supports a rate move. And then we also need growth support from RBI, which is what even the government is looking out for after they themselves, kept the fiscal at the lower side and also supported consumption through tax cuts for the middle income group. So these two domestic factors. And then if you look at the global factors, the tariff news is getting somewhat soft, with the Trump's decision to postpone the tariff imposition by a month. Trump is pushing for lower rates in the US. It's not clear how that will happen, but the Treasury Secretary has come out and said that they are not going to ask Powell to cut rates, but they will be definitely looking at the 10-year yield being lowered, because the Treasury Secretary is very much concerned about the finance costs that they are incurring on the huge borrowing that they are doing. So possibly we are looking at yield curve control measure in the coming months. So these two factors globally will also look supportive for a rate cut by RBI. So the suspense will be broken exactly in another 2.5 hours. And of course, there is a near consensus that the stance of RBI, monetary policy stance, will be eased from one of neutral to accommodative. Their forecast on growth looks like it will be sized down from the current projection of 6.8%. And also, the inflation forecast will be very key for monetary policy going forward. Also, the future indication or the forward guidance, which of course normally RBI reference from spelling out clearly, is something that the market will be looking out. Market will be trying to assess from his statements on growth and CPI forecasts. So that's, and of course the liquidity measures. Liquidity measure last meeting they cut CRR rate by 0.5%, releasing more than 1 lakh crore into the system. The current CRR rate stands at 4%. After that, in the recent days, they have also taken various liquidity easing measures through triple VRs, and then also by indulging in buy-sell swaps up to USD 5 billion. All these things have once again added 1 lakh crore into the system. So having done so much, I feel RBI might remain on the watchful side. Perhaps on the on the premise that liquidity easing does not require for them to wait till next meeting. If it is required, they could actually do it intra-meeting, which they have done already. So liquidity easing might, hold on for the time being. So these are my expectations. Mostly, I expect a 0.25% cut. Yes, important point would be people expect the rupee to weaken. Whether that will be a consideration for a rate cut, I feel even if there is no rate cut, rupee will continue to weaken. As we know, RER is overvalued by over 5% now, and the flows are not supporting the USD INR to come down. So the policy rate, if it is going to help growth, I think that should not be stopped. Just keeping the rupee factor in mind, of course. And rupee also has weakened substantially in the last 4 months by nearly 4.5%. So even if it does weaken, I think the weakness may be limited to under 1% or so. So from that perspective, also I expect a rate cut from RBI. On the global side, yesterday we had one more major central bank cutting rate. Bank of England cut rate by 0.25%. Their statements have been quite dovish. Forecast for growth is lowered also, and they are looking at more cuts in the coming months. Of course, uncertainty about US trade policy will be something that they will be look at also. Although UK is much less protected from the tariffs because they are a service oriented economy. On the US side, we had quite a few data, mainly the weekly jobless claims, which came higher than forecast. Unit labor cost was lower than forecast. These things led the yields to come lower. And now, as you said, we are heading into the key non-farm payroll report today. Expectation is for a rise of 1,70,000. And the setup leading to the report is that job openings have been lower, while the ADP number, the private payrolls report, has actually come higher than expected. Now, the January report, this is something different that we are seeing. Will have some extra headlines because the Bureau of Labor Statistics will also release annual benchmark revisions to the job creations, and this usually is done on a yearly basis, and this could be something that the market will be looking forward to. There can be upward revisions to the household surveys, while the establishment survey can be dropped, but this is something that there is no specific forecast, so we will look out for this also from the Fed perspective. On the currencies, yen has been outperformer once again. It has traded below 151. If you remember, it almost touched 157 post BOJ rate hike last week, but since then it has been steadily rising, and this is based on wage and price developments that are supported further rate hikes. In fact, one of the official from BOJ has said that the central bank must raise rates to at least 1%, that is another 0.5% from current level in the latter half of the fiscal 2025, with the upward risk that is seen for the prices rising. GBP slumped immediately after the rate cut, but has since made an impressive bounce. As I said, UK is somewhat immune to the tariff news, so it comes more as a safe haven relative to the other currencies. And of course, the yield curve control, which is maybe in the offing in the US, supports the bond market, in the sense yields can come even lower, particularly if the non-farm payroll report today prints lower. But that's something that at the moment market is not looking on the day-to-day data, because the policy announcements from the new administration is predominating, and there are so many other policy measures that are on the way from the Trump administration, particularly on the bond market control, and also on the implications of the immigration policies, and whether they will negotiate and really remove the tariff news, or whether they will stay. These are uncertainties that will be more in the minds of the traders than on the day-to-day data. So I think overall dollar direction may remain rangy for now, but it's significant that dollar has not been rising too much despite overall picture of higher yields relative to other economies. Now, on the dollar rupee, as I said earlier, the rate cut will have some implication, because if they do cut rates, rupee will tend to fall immediately, a knee-jerk reaction at least. But I mean, at the worst case, I see not more than 1% fall in the rupee from the current levels of 87.60. Should 88.50 should be the worst case scenario, even on the rate cut front. But then from there, we will look at how the global factors play out. But there is no rate cut. Then I think rupee strength is not going to be much. It may be limited to 87.40, and at those levels, I think the local domestic importers will be very keen to buy, because the overall dollar direction has not changed to the downside. Thank you.
Thank you, JK, for that comprehensive coverage for the monetary policy decision today. So, as JK mentioned, markets is also pricing a 25 basis point cut, as many economists say so. The monetary policy stance is also expected to change from neutral to accommodative. Growth and inflation forecast will also be closely looked at. Now, with respect to liquidity measures, last meeting, RBI cut the CRR, and in the last few days, they have tried to improve liquidity conditions by way of variable rate repos and buy sell swaps. So maybe that's an action they will keep doing intra meetings rather than wait for the monetary policy decision. On the global side, we had the Bank of England cut rates by 25 basis points. Statements were also quite dovish, and they are looking at more cuts in future meetings. On the US side, weekly jobless claims were higher than forecast. Yields came off, but people will be looking forward to the non-farm payroll data today. That's it from us today. Thanks for listening. Have a very good weekend. We'll see you all on Monday with a fresh round of updates.